Hello and welcome to this Autovista Group webinar. Today we're going to be exploring the electric vehicle trends that are currently transforming automotive markets. I'm Tom Geggus, the editor of Autovista 24, and I'm going to be your moderator today. Now on our panel of experts, we have Dr. Christoph Engelskirchen, Autovista Group's Chief Economist and Director of Valuations and Forecasting. We also have Christian Schneider, EV Volume's Director of Content, and Neil King, Head of Forecasting at EV Volumes. So, what can you, our audience, expect from today's webinar? Well, we've broken it down to three simple segments. The first, we're going to take a look at global and regional EV outlooks. Then we'll move on to a breakdown of brand performances. And finally, we'll tackle some battery technology trends. Now, at the end of today's webinar, we will, of course, leave some time for a Q&A session with our fantastic panel of experts. So if you have any questions during this webinar, please don't forget you can submit your questions through the Q&A box. And if we don't have time at the very end of the webinar, we will of course try and reach out to you via email with an answer to your question. So please don't be afraid to submit those questions. So without further ado, I think it's a good time for us to start with our first segment. Christoph, I'm going to come to you because we've seen some really strong economic headwinds of late. The market has just been blown well off course by so much uncertainty. Could you provide a bit more context to this? Christoph, you're on mute, just so you know.
Thanks, Tom. Certainly, and good to be on this webinar. I mean, you asked how the economy is faring, and I guess it's fair to say that some of the economic context that we are all witnessing, every day is a bit worrying. Yeah, I wanted to say challenging, but I think it's a little bit more than just challenging, right? So it is a bit worrying. We have in a lot of countries and regions some uncertainty, as to the direction of the economic policy. To mention Europe and the US, for example, as some of those governments where it's not quite clear where economic policy is heading, that has triggered a rise in uncertainty. We have these shape-shifting tariffs all around us that are also creating a situation where where neither those investing nor those consuming know what to do, and that usually results in less spend, and in less wealth, in economies. We have all of these geopolitical tensions and conflicts, and on top of all of this, we have companies reconfiguring the supply chains, which is also a medium-term activity. You need to pick the right country, you need to pick the right dimensions of your facilities, you need to invest, and investing is still very expensive because the interest rates are still elevated because there are still inflation concerns. So this is a bit of the context. And if we move to the next slide, you can see what this has done in terms of economic forecasts. I'm just taking here one example. You can pick different institutes, you'll get different numbers, but what is consistent is that the forecasts, economic forecasts, and this is gross domestic product for 2025, will have come down. So on the left side, you see the forecast for this year from December 2024 from the OECD. And on the right side of the chart, you see the numbers for the forecast for the full year 2025 that were published in March this year. Today, there was an institute which was well renowned, or is well known in Germany, and it expects zero growth for the German economy. Now, we all know this. It is worrying. If you read between the lines, you can see that there are more downside risks beyond these forecasts than upside potential at the moment, which is of course also something to watch out for.
Absolutely. I mean, given all this, Christoph, what is happening with your expectations? Do you think this means more headwinds for electrification as well?
Yeah, so if we look at electric vehicles, I think the long-term trajectory towards a predominantly, battery electric vehicle world is still intact. Yeah, there are a lot of positives, and I've picked up some of the positives here from a European perspective. Just to pick one region for it. But of course, we cannot negate that there are strong headwinds as well. These are on the negative side on this chart. I would say that in the short and medium term, these headwinds are quite tangible. And to just give you a couple of examples, right? So on the positive side, we have this very strong EU policy, the very strong UK policy towards a zero emission target that has been intact. Yeah, it hasn't been modified. Some people might say yet, but who knows, right? So it is intact. That's positive. We have infrastructure regulation, which is mandating a certain level of infrastructure to be put in place. We have that technology of plug-in hybrids re-emerging. So I'm talking about cars that have a long range. It's not the worst of both worlds. It's actually the best of both worlds, and that should be attracting new consumers into the technology. Also, if you look at a couple of studies, those who have bought an electric vehicle, they are very likely to keep buying one. So once you are in, you don't want to get out. The numbers are around 90% repurchase intent in the US and in the UK. Yeah, so that's of course. I mean, we're talking about lead users or early adopters here, but I think it's still counting as positive. And let's not forget China. I mean, the technological push that is coming from China is also going to play a huge role on the positive sides towards pushing electrification forward. On the negative side, we have now this big switch from early adopters or innovators to the mainstream consumer. That hasn't been easy, yeah, in a lot of markets. There are also some issues in terms of quality signals that the OEMs are sending towards, in particular, the battery electric vehicles. This is the second bullet on the negative side. There are three things here that OEMs are not doing well, in my view. Yeah. So the first point is they, if your battery falls out of warranty or becomes worse, you don't know how much it costs for the battery to be replaced. Yeah, and that is an uncertainty factor, and that is pushing attractiveness of these cars down as a used car. There is uncertainty around how to measure in a consistent way the quality of the battery. That is another factor of uncertainty. And another one, which we all take for granted, but it is a weak quality signal, is that the standard of warranty for the battery is 8 years and 70% battery capacity. That's not a good, it's not a good signal to keep this car, alive and attractive over the used car cycle that it eventually goes through. Yeah, we do have high electricity costs, and that washes through to TCO. Challenges in some markets. Public charging is an issue here as well, very expensive. And as I said, we have some unclear government policy on electric vehicles. And that doesn't necessarily mean cash discounts to buy a battery electric vehicle. It could also mean disincentivizing buying ICE vehicles, and there has been inactivity, yeah, on the government side in many markets, and I guess it'll be re-emerging, but that's at the moment on the negative side.
Thank you, Christoph. Neil, I'm going to come to you now. How is all of this impacting your forecasts at EV volumes? How have your short-term forecasts, for example, come down because of these headwinds?
Yeah, hi Tom. Yeah, I mean fundamentally, it's too early to really see any direct impact on electrification per se. But if I can start just by discussing our latest total market volume forecasts or total industry volumes (TIV) forecasts. Now, fundamentally, I mean, as you'll see here, we've downgraded the outlook for this year across all regions, whereby we're seeing the European market essentially being stagnant. And North America, not surprisingly, in conjunction with the autos tariffs, the new goods tariffs, and the risk of the, let's say, the withdrawal of the Inflation Reduction Act, which provides for tax credits, We're seeing forecasting now a slight decline in Northern America, which encompasses US and Canada. Fundamentally, what this does, of course, is mean that only China and the rest of the world are driving growth in 2025. One caveat I would say is that, especially as far as Northern America is concerned, we are actually seeing a pre-tariff bump. We witnessed that in April and again in May, whereby consumers are rushing to take advantage of the lower prices because their perception obviously is that prices will increase in the short to medium term, and we'll take it from there. But I mean, the upshot is that we issued, let's say, a special emergency forecast update in April, and within that, we did reduce the global light vehicle sales outlook by about 600,000 units just over the course of that month, largely because of the, let's say, the fluid tariff situation.
Absolutely. So then that's light vehicles, total market. What about electrification? How has that been affected?
Yeah, if you move on to the next slide, I can talk about that shortly. And yeah, I mean, fundamentally, I mean, Christoph alluded to this already, but China is, the dominant force as far as EV growth is concerned, and its position is in the world is strengthened to a certain extent because we are now seeing more weakness elsewhere. I think what we have done is we've actually upgraded the China outlook as far as EVs are concerned. There is, let's call it unbridled growth, partly because of the advantageous TCO position of EVs in China. And as you can see here, we're seeing 21% growth in Chinese EV sales this year, compared to comparatively low figures in Europe and North America for obvious reasons. I mean, overall, because of that dominant force being China, we are forecasting 19% growth in EV sales this year. So that sort of contradicts a lot of the media negativity of this, the global slowdown and EVs being in trouble. We've all read the headlines. But I must add that Northern America, of course, is the pain point. Aside from the auto tariffs, which in the short term seem to be benefiting ICE as consumers rush to beat any price increases. That's having a negative impact already on the BEV share, although plug-in hybrids, PHEVs, are holding steady. The share is still slightly up on last year, but of course, we're also assuming that the IRA tax credits will disappear later this year. And so that, after, let's say, the short-term shock, we can certainly expect a greater downturn once those tax credits are removed. But on the flip side, Europe obviously has introduced new emissions targets. They're still in place, albeit obviously, as most people I'm sure are well aware by now, that the targets are now relaxed, whereby OEMs can achieve them over the years 25 to 27, and not necessarily just this year. But one thing I must add is that we don't actually expect Europe to hit those targets, largely because of this low pace of electrification of LCVs, like commercial vehicles. But the sort of the interesting, almost counterintuitive overriding position here is that although we've downgraded the light vehicle sales outlook globally, because of that unbridled growth in China, we're actually forecasting 700,000 units more in terms of EV sales this year than we did in March. And that is more than compensating for the downgrades, especially those quite dramatic downgrades in Northern America. And hence why we're still at the 19% growth this year, which given us about a 24% market share.
And of course, these are all your short-term expectations, Neil, but maybe you could
Yeah.
quickly take us through your long-term outlook.
Yeah, sure. I mean, fundamentally, as you can see here, and Christoph alluded to this as well, that we see let's say the EV share trajectory being intact outside Northern America, of course. Now, obviously there are volume changes because of the adjustments that we've made to a light vehicle sales outlook. But emissions targets are still in place in Europe. The 2035 ICE ban is still in place across the EU and the UK. That wasn't amended recently when they did relax, let's say, the short-term emissions targets through a combination of, let's say, the extension of the scrappage scheme in China, which was introduced in, I believe it was April last year. And of course, that attractive TCO position that I mentioned, we're still seeing, ongoing growth in China itself. The real pain point, as is clear from here, is Northern America. Not surprisingly, the impact will be reflected in the short term. Let's say we can't predict, what government policy will be in the next few months, let alone what it will be in 10 years' time in the US. But not surprisingly, as it stands, we've had to quite dramatically reduce our long-term outlook for Northern America. But as China, faces, let's say, more challenges internationally, we can expect to see them seeking to offset any losses, any weakness elsewhere, by boosting domestic consumption at home of, EVs in particular. And yeah, I mean, everything considered, we're still looking at, essentially about a 24% EV share this year globally, rising to about 43% in 2030, and then tipping over so that EVs will account for more than 50% of the market from 2032 onwards. The final point I must make, of course, though, and Christoph suggested this in terms of the broad economic situation, is that there are significant downside risks, and I would say they're twofold. One, there is a risk that governments may pull back on incentives, they may withdraw any stimuli. So even the EU, I'm not saying this will happen, but there is even a risk that they could even further relax the emissions targets, and that sort of holy grail, the 2035 ICE ban, may even change. We're not saying that it will, but these are clear risks. And beyond that, national governments obviously face mounting financial pressures. More governments are, let's say, more conservative and so less inclined to incentivize electrification. And those higher priorities may well, erode the outlook as it is today.
Wonderful. Thank you, Neil. So that does take us to the end of the first section of our webinar today. Of course, we are about to move on to a brand performance breakdown and then a look into battery performance trends, and then of course the Q&A section at the end. So please don't forget to submit any questions you have for our expert panel. Christoph, I'm going to come back to you to head up our next section because we've seen protectionist trends in the US rising and local demand not quite strong enough to absorb the volume of cars, leading Chinese brands nowhere to go really other than Europe, you might argue. But do you think that with pressure on the supply side and the European economy struggling and a volume push coming to Europe, what's going to be the outcome?
Yeah, so I mean, there has been notable, increase of dynamism from Chinese manufacturers for quite a while in Europe. So I wouldn't tie any of that to, these shape-shifting tariff discussions that we're currently having. And I don't think that over, the last 3-4 months, the supply pressure will increase. Yeah, because of that for Chinese brands in Europe. But all in all, we have a bit of a supply, an oversupply of battery electric vehicles at the moment versus the demand. Yeah, and I think this has been made clear with the headwind discussion. I want to maybe take us on a little bit of an excursion to the used car market side, and if you switch over to the slide, what we've done here is we've shown how battery electric vehicles, so these are fully electric battery electric vehicles, how their residual values have been developing over time in several European countries. That's on the left side, and you can see that between pre-pandemic and today, the values have pretty much come back down. Yeah, so stabilized. But still, there is still a downward pressure if you keep these lines, if you keep drawing these lines, if you continue these lines. Now, when you drew the same chart for internal combustion engine vehicles, you would see that the values are still above pre-pandemic levels. Yeah, so that's the first point. So battery electric vehicles are struggling as used cars. And when you look at the right side of this chart, you see our outlooks on 3-year-old battery electric vehicles in 2025, 2026, and 2027, and you see a lot of arrows pointing down. And this is exactly the combined effects of several things, but supply pressure is one of them. Yeah, so we have obviously more volume that needs to be absorbed than people wanting to absorb it. Yeah, so that's why these arrows are pointing downwards. And part of the effect is also because we still have a lot of life cycle depreciation in these vehicles. They tend to age more quickly because if a new model in smaller vehicle segments or with better range, smarter capacity utilization, more efficient vehicle is being launched, maybe at a lower price point, that naturally has a negative impact on what is currently out there in the market. Yeah. So this is the context.
Christian, with this in mind, how are European BEV sales going to be impacted by a growing influence of Chinese brands, do you think?
Thank you, Tom. So on the next slide, so we can see here basically the European BEV sales in total. So it's the big bold number on the top of every bar for the next few years, split it by the brand origin of the brand. So basically, where is the brand coming from? So if you look on Germany, for example, if you have Germany as a brand origin as the biggest part still in Europe, that brands like Volkswagen, BMW, Mercedes, for example. And if you look on China, there are brands like MG, but also BYD, NIO, all of those entries that we were seeing in the past, and maybe even more that are going to enter the market in the next few years. And if we look on this year, so our forecast for this year, we can see that the Chinese brands will have a share of the BEV market, a share of 10%. Roughly, so which is accounting for a little bit more than 200,000 units in whole Europe. And if we look forward, so 5 years into the future to 2030, what we can expect from our forecast is that the share by itself will not grow significantly, so it will be around 7-ish%, depending on which models are coming at which point in time. So there's always a little bit of fluent thing in forecasting. But of course, the total BEV market in Europe, like we were seeing before from Neil, will grow, of course, significantly over the next few years, and the Chinese brands are growing together with the market. So we are expecting to see around 600,000 new Chinese BEVs are sold in 2030. So that means we will see more of those cars on the street in general.
So, and if we break that down into brand performance, who do you think is going to lead the pack? Because if we went back a year, maybe two, might have said Tesla, but is that still the case?
So that's a good one, Tom. And there's a lot of discussions around that, of course, and a lot of opinions. So what we can see here, so last slide was our European outlook. This is now global picture, just to mention that directly in the beginning. So it's the global BEV sales that you can see here by OEM group, meaning it's not, for example, it's Volkswagen Group here in that case. It's not only Volkswagen, so it's also containing brands like Audi, Bentley, and so on. And what we are expecting to happen from last year to this year. So last year is the blue bar, it's total sales 2024, and this year is the purple one, 2025. We are expecting that Tesla sales are going to drop slightly because of the main root cause for that, from our opinion, is the quite old model lineup at the moment. Yes, there was a Model Y facelift coming now, but the effects we saw it also with the Model 3. It's not kicking in as strong as maybe for other brands facelifts are kicking in. So we don't expect a huge facelift effect here for the Model Y this year. On the other hand, we can see not a massive growth for BYD, but also some growth potential for BYD this year, mainly because they are going to launch two new models this year, or expect them to launch two new models, which are mainly sold in China, so they have the biggest effect in that market. Most European customers, I think, haven't heard about those models yet, and maybe will also not hear about them in the next few years. And also that one, that will mean that this year could be the first year where BYD is overtaking Tesla in terms of pure battery electric vehicle sales. But we are also expecting Tesla to strike back in the long run. So if we look on our outlook for 2030, it's quite long outlook. There's a lot of uncertainty in that. We expect that Tesla sales will grow significantly, mainly because of two new models that will hit the market. And if they will come like we forecast, so a compact SUV in 27 and a compact hatch in 26, they will have a massive impact on all markets, like we have already seen with the Model 3 and Model Y. So just another number for all of you. So we expect that in 2030, if those models will be in the market at that point in time, they will account for 1.7 million, only those two models alone globally. So which would be, I mean, it's a huge number.
Excellent. Well, I think that takes us through the brand section of our webinar today and onto the third and final segment before the Q&A at the end. So once again, please do submit your questions, because a lot of talk here has been about expanding growth and the electrification of both global European markets. This is going to take an awful lot of battery power, and news of solid-state batteries has drawn a lot of attention, for example. They do seem to be something of a holy grail for the industry. Christian, what do you expect of this technology over the coming years?
Yeah, I think, Tom, I think you're right. So there's a lot of news or opinions around solid-state batteries, or SSBs, like it's here in the title of that slide, are the holy grail. As soon as they are solid state in the market, everyone will buy an electric vehicle. That's the breakthrough moment. But if we look a little bit more in, I mean, what is really concrete announced at the moment for the few next years in terms of vehicles that will come with a solid state battery, there is not a lot of concrete stuff announced. So just to give you a few examples, Toyota and Lexus, they are planning at the most go to market in 2028 as earliest, and they're planning that. So there's even no concrete announcements. What exactly is the battery? Where it exactly will be? And so it's quite fuzzy still. And also all of the other major European OEMs, for example, they are not planning with any go-to market before 2030 at the moment. So if we are speaking about solid-state batteries, it is quite far ahead into the future. On top of that, we can also see that already LFP or NMC's batteries, so LFP is lithium iron phosphate. It's the greenish area in that chart here, and NMC is the orange area. So nickel, manganese, cobalt-based batteries, so or both lithium-based at the end, have made huge progress over the last years in terms of technology. So I mean, in modern BEVs at the moment, you have battery capacities of more than 100 kilowatt hours already in those cars. You could have, at least for WLTP or other test cycles, already 700 to 800 kilometers of range and that is sufficient for most use cases that car buyers will have. On top of that, the prices for LFP and NMC batteries have dramatically come down over the last years. If you look now on solid state batteries, yes, they will definitely, if they will come, offer even higher energy density, so higher ranges, higher energy capacity for the same space or weight. But they will also come, at least what what we can see at the moment at significantly higher costs, of course. So this meaning, and what we can already see in most major markets across the globe at the moment is that when range is not the blocker at the moment anymore. If to bring people into electrification, the biggest blocker from especially the mass market is the price of the BEVs at the moment compared to the ICE competitors. And solid state batteries will not solve that issue. So this is why we think, yes, there will be a little bit of SSBs in the market, maybe, but it will be, I mean, we have it in the chart, but you really cannot see it. Even I can't see it when I was creating the chart. It's less than 1%, a very thin purple line somewhere in that chart. So it will still be a niche solution in our forecast, at least for the next 5 years.
So that remains that LFP and NMC is still going to be the driving force of the market, and that does still mean that they're going to have a lot of those batteries being produced. So which company can we expect to produce the most batteries for EVs in the coming years?
So yeah, you're completely right. Like Neil outlined, I mean, we will see significant growth in the BEV, but also, I mean, EV, I mean, so plug-in hybrids, for example, they also need a battery. So there is a huge demand for traction batteries at the end over the next years, and it will grow extremely, like we can see here. Compared to last year, we expect 2030 to grow by 200% worldwide. So we need huge capacities of factories who are able and capable to produce, those batteries at the end. Interestingly, so I mean, huge growth in demand, but we also expect at the moment that the share of the big battery producers will not change dramatically over the next year. So CATL is still or already the biggest at the moment. And we expect that also CATL will lead the pack within 5 years, followed by BYD, who are also quite, I mean, maybe you know, maybe not. They're not only producing cars, they're also producing batteries also for other vehicle manufacturers. And LG is the third one in the pack, and also Tesla is slightly starting to produce their own cells and to build it into their cars. So we see a growing share of Tesla for the future. Maybe to mention a quick one on the other part, which is maybe the biggest growing part here in that picture is, so other is, yes, there are a lot of other smaller cell suppliers around as well. But of course, I mean, when we do a long-term forecast, it is for us, as more as we are going into the future, as harder it is also for us to predict who exactly will provide the batteries and the cell for that car. So there is also just a growing part of uncertainty in that other part that we can see.
Now in 2024, we did run a webinar on battery sizes and looking at the benefit of bigger batteries versus smaller but more what you might call smart batteries, ones that are more efficient use of power. So what sizing trends can we expect in Europe in the next couple of years? Christian, can you give us an update?
So that is, when I was creating the content for that webinar, I was first thought, that's an easy one. And of course, we will see a growing line. The capacity will grow continuously across the globe. But when I then looked into our forecast, I was quite surprised, and we had to dig into a little bit deeper and where this is coming from. So what you can see here is we are going back to Europe. So it's European average battery capacity developments from 2022 to 2030. So it's also forecast element in. And you see the light blue line is all light vehicles, all light battery electric vehicles that we see on sale in Europe. And the purple line is the most famous segment at the moment, C-SUVs. If we focus maybe on the C-SUVs who have a pattern that we maybe haven't expected, at least I haven't expected that before, is that we saw even a slightly dropping. So from 23 to 24, the battery capacity was even dropping on average, and we expect that it will stay stable or even slightly decrease even more. But where's this coming from? I mean, why are we forecasting that trend? And we expect that one major thing is that more and more, especially European OEMs who still have the major part in European BEV sales, are offering their cars now with a second alternative for their NMC battery before, so with an LFP battery. An LFP battery normally comes with a lower energy density than an NMC, and also a lower capacity at a lower price point. And as I mentioned before, range is in most markets where we are going from early adopters to mass market not the limiting factor anymore. It is more the price of a vehicle. So we are expecting that going further into mass market stage, that at least a certain share of people who didn't have the option before to go to a smaller battery are switching now also to those smaller battery alternatives that they can have in the market. And that will drive, will at least not, will result in not growing battery capacities, at least in a fixed segment. But that doesn't mean automatically that the range will not increase, because another trend that we could also observe, and which is playing into that here, is that yes, we love to speak a lot about battery technologies, and batteries are getting bigger and can charge quicker. And it is really interesting stuff, and we could speak about hours about it. But something that we sometimes forget about is that the whole car, so the engine, the aerodynamics of the car, but also how the battery management system is working together with all of the components, is getting way more efficient over time in the cars. And just to give you maybe one or two examples. So if you look on the Model Y, it has just had a recent facelift, and the battery more or less stayed the same. It's slightly bigger, but it's more or less the same battery. But what Tesla could achieve, because of a lot of small details, is to bring the energy consumption with the facelift down by 10%. So that means with the same battery size, you could drive 10% longer, or with a 10% smaller battery can still have the same range. Or even more extreme, a few years ago, I think 2 years ago now, Peugeot started to offer another battery engine combination in the smaller Peugeot 208 electric. And interestingly, the new engine was way stronger. It offered way more horsepower than the old the other engine, the smaller engine. But the energy consumption of that new combination was 20% less than of the older one. So it's a 20% difference. And if that would be an ICE car, you would have, news all over the place about that. But for a battery electric vehicle, it seems we don't speak so much about energy consumption yet. And this is, of course, also playing into that trend. Yeah.
Thank you, Christian. Now that does take us to the end of our third segment today. But before we get onto the Q&A, I would like to mention that if you would like to go back and watch the webinar that we've just discussed about different battery ranges, smart batteries, for example, all of those webinars that we have hosted here on Autovista Group are available on Autovista 24. So please head over there. You'll also find the recording for this webinar fairly soon after we're done recording it. We'll also go live on Autovista 24 with an accompanying article. So please do check that out. Now, we are running short on time, but I think we have a bit of time left before the end of the webinar today for a couple of questions, and I could already see we've had a lot come through. So thank you so much if you have submitted a question. If we don't get to it today, I am really sorry, but please don't fear, because we will email you with an answer to your question following this webinar. Now, I think, Neil, I will come back to you, if you don't mind. I did want to know about how segments are important when it comes to total volumes. So are we going to see more small segment cars or MPVs or SUVs by, say, 2030?
Yeah, thanks, Tom. If I break it down in simple terms, if you look back to 2015, of global EV sales, about 40% were what we classify as cars. About 70% what we classify as cars, about 10% MPVs, and the remaining 20% SUVs. But if you fast forward then to 2024, we've had quite a dramatic shift whereby SUVs now account for more than half of global EV sales, and cars are the rest, and then just a few MPVs and a few LCVs, but with a fairly minimal share. But going forward, yes, absolutely. We're clearly seeing the rollout of more affordable, smaller cars and SUVs, so small and compact. otherwise known as B and C segment vehicles. So there's not necessarily a big shift in terms of between cars and SUVs, but there's a lower center of gravity. So, and that's, because of, let's say, the reduction in lithium costs that we've seen in recent times, because of energy efficiency gains, the introduction of LFP, all of these factors are contributing to that rollout of more affordable EVs. And that's why, OEMs are now, let's say, entering into those segments, which were, let's say, challenging before from a cost perspective.
Christian, we've had a question about hydrogen, because we've spoken a lot about battery electric vehicles, EV. But where do we stand on the market when it comes to hydrogen, or say range extended electric vehicles? What do you think?
Yeah. If I start with hydrogen, and then we see how much time we have left until the end of the
We
webinar.
do have a short amount of time.
So because hydrogen, so for hydrogen, as most of you know, there are not a lot of, especially for passenger cars, there are not a lot of alternatives besides Toyota and Hyundai at the moment with very niche models. And they sell barely. I don't have the numbers in mind, but I would say close to very zero, to be fully frank. And for our outlook, so when we are looking forward, is we also don't expect that this will change. We don't see any big announcement for hydrogen passenger cars. Yes, there are a few prototypes. BMW is also testing around with hydrogen, but there are no concrete announcement. And the battery technologies, again, especially for lithium-based, so LFP and NMC batteries, they made such huge progress over the last year. So CATL just announced this year, I don't nail me on it, but a battery that you can so quickly charge. I mean, you can easily have 1,000 kilometers of range with an LFP. I think it was an LFP or an NMC battery, and you can charge it, I think, a few hundred kilometers within five minutes. So with having that in mind, refueling a hydrogen car will also take you a few minutes. So there is not a big advantage then anymore of driving a hydrogen car, which is still less energy efficient than if you store the energy in a battery than in hydrogen. So we don't see a big future for hydrogen for passenger cars, at least.
And I'll give you 1 minute to answer the question on EREVs if you can.
Thank you, Tom. I will give my best. So we see a lot of EREVs in China at the moment. So it's a big thing in China, in the Chinese market. And there are rumors to bring, that if it will be the same in Europe. But there are a few things which could speak against it. So, and the biggest thing I would say is that our emission norms that we have in Europe. So if you bring an EREV, and sometimes it's quite interesting constructs that are built into the EREV as the range extender from an ICE perspective. First of all, you have to homologate it for the European emission norms, and that will take some time, and it will be costly. And the question is if in a few years, when you have to achieve that homologation, if it's still a hot topic in Europe. So we see more brighter future at the moment for PHEVs with bigger batteries that we also see in the market for Europe, I would say.
Thank you so much, Christian. Fantastic answer in a short amount of time. I'm afraid that is all we do have time for today. Thank you to everyone who submitted a question, but please don't be afraid. Like I say, we'll reach out to you with some answers post-webinar. Now, for recording this webinar, as I mentioned, do go to Autovista 24 if you want to relive the experience. And while you're there, don't forget to check out our next webinar, which is going to look at residual value pressures, shifts in market dynamics, and EV momentum. A big thank you to our panel for joining us today. If you would like to check out any of our EV volumes content, you can also go to autovistasgroup.com/explore. But that is all we have time for. So thank you all so much for joining us, and thank you again to our wonderful panel. Thank you.